Hey everybody, thanks for coming. It's really nice to be in front of big audiences again after a few years. Teresa and I are going to talk about how the cyber insurance market is getting better at assessing risk because it's been a chaotic few years. So I'm Eric Skinner. I'm from Trend Micro. Trend Micro is a longtime security vendor, currently a huge focus in areas like XDR and attack surface management and cloud security. And I've been in cybersecurity for about 25 years. My first RSA was the year 2000. So I guess I'm showing my age. I've had the pleasure of working with Teresa.
Hi everyone, it's nice to be here and see all of you and spend some time this afternoon together. My name is Teresa Lee. I'm the Chief Claims Officer at Cowbell Cyber. So we're a cyber insurance provider in InsurTech. And before this, I was also a VP at Swiss Re, which is a cyber reinsurer, and AXA XL also. So I've been in cyber insurance, and then also I should say that I'm a recovering coverage attorney. So represented cyber insurers for over a decade, the first part of my career, trying to keep them out of trouble. And so we can just get started, I think, right?
Let's do it.
Okay. So because I'm the lawyer in the room, this is the disclaimer you guys have seen. Please read it and remember it and abide by it. La la. And so why are we talking about cyber insurance today, especially with respect to cybersecurity? And you'll see in this picture, it's a boiler that blew up. And in the 1800s, this is just to depict that sometimes there needs to be an industry, and insurance, it's not that interesting, but it did have some very influential ways to foster adoption. And so best practices, better practices, risk mitigation is oftentimes forwarded by the insurance industry. So when the boilers were blowing up and causing lots of property and bodily injury damage, Hartford Steam and Boiler said we should do inspections, and that's one way that we can mitigate against loss. And then more recently, everybody in this room seems too young to remember the days of we didn't have to wear seatbelts, but the auto insurance industry, yes, you, Eric. Now it's not even that controversial. You just get in the car, you put on your seatbelt, but it was the auto insurance industry that really forwarded that adoption of a better practice to mitigate against bodily injury. So if you wear your seatbelt, then you, as a condition to getting auto coverage if you get hurt. And then more recently, carbon monoxide detectors, sprinklers, things that are now part of the building code, but they were forwarded by the insurance industry. So just kind of a signal towards, maybe there'll be another circle here, 20-something, the cyber insurance industry was how X, Y, and Z got adopted mainstream. That would be good. And so today we hope to cover some things in our agenda, really to have a little look back. And in cyber insurance, which is a relatively new line of insurance, looking back really means 5 years. It's shifted a lot, but we'll see what the challenges were in recent memory, how risks have been assessed historically in the past few years, and where we're going with that. And then we'll give you some practical tips and things to how you may get better terms for cyber insurance. And what the future holds, I think I'll show you my insurance crystal ball later. So let's talk about some of the challenges that we've seen. Again, I mentioned that it's a space that's shifted quite a lot recently. So in 2019, just 4 or 5 years ago, the claims were relatively low. This is also pre-pandemic. So the policies were relatively easy to get. There was expansive coverage, not too much you needed to do to even get high limits on cyber insurance. In the next 2 years, yes, we had the pandemic, the attack surface increased quite a bit, but also claims started to come in. Very severe claims, lots of breaches, ransomware really got its traction here. And then as procurers of cyber insurance, you may have seen the rates go up quite remarkably. So I'll go through that adjustment later on in the presentation. But there was also a challenge in getting cyber insurance. So even if you had what used to be relatively good controls and were seen as a good risk, the cyber insurance industry was having a different look, a different approach, and you might not have had that much success even getting cyber insurance. And we'll go into a little bit more of the future of what that looks like. There is some good news, hopefully. One of the drivers of cyber insurance is obviously data breaches, cybercrime, and ransomware. And ransomware, I just put this up here, Net Diligence did a survey, and it's no surprise that a ransomware event is very financially impactful to an organization. And in recent times, even small to medium-sized enterprises, so the mom and pops up to $2 billion in annual revenue, even that space that did not used to be a focus for the threat actors now is, and it's quite impactful with an average of $500,000 impact to an organization. And then there are other impacts too, reputational, business interruption, other things that are quantified. But also we often hear from the SME policyholders that, but for the support of the cyber insurance policy, it would be very difficult, if at all possible, to get through a cyber event such as a ransomware. I'll hand it over to you, Eric.
Yeah, so let's talk a little bit about some of the dynamics in these environments, because for customers as well as for insurers, the last few years have been pretty turbulent, and for cybersecurity vendors as well, with respect to the way attackers have been behaving and the way environments have been changing for customers. So let's have a brief look at what Trend and Cowbell are seeing with respect to the dynamics in the ransomware space and some of the other threats that result in some of these high claims. So at a high level, what we've seen is that the frequency has been increasing on these kinds of ransomware attacks. The severity has been mostly stabilizing, but we'll touch on this a bit later. There was a little bit of an uptick in late 2022 and into Q1. Some of the attack groups are having a little bit of a resurgency. There's been a lot of growth in exfiltration behavior. Some of the attack groups got a little bit too much heat for some of the destructive stuff they were doing, and in order to take some of the pressure off themselves, and for a variety of other reasons, as well as just being able to exert more pressure, even if people had good backups, so they've pivoted into doing a lot of data exfiltration. The speed is intensifying, so attackers are able to move a lot more quickly through your organization, and that means that organizations have less time to react. And at the same time, when people are paying ransoms, they are funding these attack groups, and I think we're all interested in seeing the attackers get less money, right? When the attackers do get money, they're subsidizing attacks against a further 6 to 10 victims, according to some data science work that Trend was doing. And then when we look at BEC, it doesn't get as much attention as ransomware, and yet it's a pretty substantial cause of claims, And historically, that's been, hey, pay this fake invoice, and using various pressure tactics and social engineering tactics to get invoices paid. And a few strategies are evolving there because, of course, organizations are implementing more process around this. So we've noticed that attackers are now leveraging other social engineering and phishing to take control of a legit account and then send the BEC emails from an internal valid account. And that avoids certain legacy email controls, gateway controls, things like that. And it's, of course, more credible, it's more effective. But they're also using strategies avoiding the finance team altogether. And they're, for example, making requests for confidential data that look like they're coming from an executive. And then the employee provides tons of confidential data, and the attacker turns right around and tries to extort the company, otherwise they're going to leak that data. So it's really hard for employees to recognize this. For example, I know everyone's talking about AI. Who's sick and tired of hearing about AI yet? Yeah, okay. I'm kind of like half putting my hand up. But one thing we have seen is that ChatGPT is helping the attackers write better phishing emails, write better BEC emails. I was in Finland a few weeks ago. Our team there said, the attackers used to do a terrible job of writing phishing emails in Finnish, because Finnish is a really hard language. But ChatGPT does perfect Finnish, for example, right? So it is hard for employees to recognize these things. So this has an impact on losses.
Yeah, so the cybercrime is one of the top 3 types of cyber claims that have coming in, but there's been a lot of loss in the cyber incident realm, and so just this depicts that there's between 2018 and 2021, there was a doubling of the loss ratio, and that's quite severe. So lots of claims were coming in. The premium wasn't keeping up. You'll see between 2020 and 21, just within that year, there was a doubling of premium. So you might have felt that as you were working with your brokers and thinking, why did cyber insurance get so expensive? Why did my rates double? And that's why there was a historic, in that time, severe claims that came in. So to sustain us all, that's what happened with the rates. Another depiction here is quarter over quarter, that time period that we saw remarkable increases in the cost. Quite painful, I acknowledge that. At the same time, the deductibles and retentions, what policyholders were paying out of pocket before the insurance was even triggered, was also going up if the premium wasn't enough. And then, of course, the difficulty in getting cyber insurance at the same time, because claims were coming in and a recognition that cyber incidents were financially impactful, as well as having other impacts to your reputation and ability to do business or be competitive. That lots of contracts were requiring cyber insurance to make sure that if I do business with you, if I trade with you, that I provide you with my data, with my customers' data, that you have a financial mechanism to transfer that risk. So contractually, cyber insurance was becoming more of a requirement and to be competitive. After the last quarter of 2021, the rates did stabilize a little bit. They're still increasing, but not as the rates that historically we saw. So they are going down in the sense that they're not increasing as much.
At 28% year over year is still pretty painful, right? So we all have to do better, and that's what we're going to talk about.
Yeah. So we recognize this in the cyber insurance industry, and would have taken on a different approach to try to help policyholders and the space in general to still get coverage. But how we do that is to properly assess the risk so that we can be prepared for those claims and for the impact.
Yeah, so at the end of the day, insurers have to measure risk, right? And we're gonna talk a little bit about how risk is getting measured now. And I'm gonna pull in some stories from Trends incident response teams to sort of contrast the risk measurements with the risk reality. How many people in the room, by the way, or their companies have cyber insurance? I'm just curious. Wow,
Amazing.
Look at that, right? Okay.
Thank you.
So really depends on the country, but in the US, a lot of organizations do. So you're feeling this pain. Cool. So, well, it's not cool that you're feeling the pain, but you understand. So I don't like the pain, yeah. So how many people know this podcast, Risky Business? Some of you? Yeah, okay. It's a really cool podcast. A guy in Australia, Patrick Gray, hosts the podcast. Very technical, but they did have a conversation. This is a little while ago, but the point is still valid, right? He was joking at the time, but he said, hey, like the cyber insurance business right now, it's a mess, because if you set up your actuarial table and the risk equals 100%, you probably don't want to offer insurance for that. But that's exactly the situation that the insurers were in a few years ago. Is no ability to figure out who is more at risk than other people. And that's why rates and deductibles and everything go up, because just like all of our businesses, insurance companies like to make money, I've heard.
Yeah, we do.
Yeah, exactly.
A little bit.
Yeah. So we know how life insurance works, and insurance companies have got really good at measuring risk in life insurance for a long, long time, and they've developed very good data models. And these data models don't have to change every few weeks the way they do in cyber, but they do questionnaires, they do medical tests, they ask a lot about your family history, and okay, you've got a family history of cancer, or you're a smoker, your risk is higher. And they have a pretty good measure of your risk by doing that kind of basic thing. Well, in cyber, they have been asking a lot of questions. Who's filled out one of these cyber insurance questionnaires personally? Yeah, exactly, right? And these questionnaires have been evolving, but they happen once a year. And let's talk about these questionnaires.
Yeah, sorry, we know it's a burden, and this questionnaire is from a few years ago, and we've been trying to develop the application process to be more streamlined. We do have an approach I think will work, but this is to display that even the questionnaire, just like as Eric mentioned, it's not an ideal, it's not optimal for a cyber risk. And here you see that it's asking about endpoint detection, which is completely valid, but doesn't, I don't know if you see it, but it doesn't go as far as, well, if you get an alert, who's monitoring that? What's the action? So just to have it doesn't necessarily give us insight into the cyber resiliency or controls that are actually being followed by the organization. And so we've worked to improve the questionnaire, the application process, also recognizing that it is a snapshot of that risk manager or financial person's understanding at the time that they signed it. And then, of course, it's one day out of the 12-month policy period that information is true to the best of the knowledge of the person signing. But what's going on the 364 other days of the year where that organization's cyber posture and architecture and other things and vulnerabilities, everything else is shifting around, changing. How do we capture that as a cyber insurer in order to provide the best service, the best product, to keep up, to make sure that we're properly assessing the exposure. Questionnaires aren't perfect, we recognize that. And then also, is it really fair to then decline an organization because the questionnaire wasn't filled out in a way that, that we were comfortable underwriting to that risk? They could improve, and we could take another look, but what have they improved during the year? Should we not incentivize adoption of better controls so that it's not just at renewal that we take an assessment? So a lot can change in a year. Also, just because the calendar's up there, I would be remiss if I didn't mention that when you are preparing for renewal of your insurance program, to start early, because if you're starting 90 days out or 120 days out, you'll have the opportunity to then adopt some measures, and then when the application comes in, you'll be able to show that you're a better risk. But if you start too close to that deadline, as we tend to do, you may not have time, and there's an impact on the terms in that regard. So that was just my plug to start early if you can on cyber insurance renewals.
Totally agree. So really want to explore some of the cases that we have seen in incident response that teach us an important lesson about some of the challenges with the way cyber insurers have to assess risk. So we have an we have an incident response team. We do not have an insurance team, but we have an incident response team that helps customers and also other organizations that get into serious trouble. And I'm just going to tell you two stories. They're anonymized, of course, where it really points to some of the challenges with respect to insurers asking the right questions and not having enough detail. So, and I tried to pick some reasonably representative ones, but still perhaps with a little bit of diversity to them. So here's a situation where a customer had a server that that was internet facing, but because they'd misconfigured NAT, so they didn't realize the server was internet facing, and also because it wasn't internet facing, they thought, well, maybe we don't need to have active or properly configured MFA on that server, and then they did have EDR, but they were not monitoring it, and they weren't monitoring the logging. So there was a massive brute force attack against that external facing server. There were thousands and thousands and thousands of password attempts against the R2P server that nobody noticed, even though alerts were being generated. And I want to pause for a second. I'm in no way trying to blame customers for this. We're going to talk about the evolution and how vendors and insurers and everybody has to do better in these kinds of circumstances. We do a lot in our product team to learn from these incidents to figure out how we can better protect customers. And not all these products are trend products. You can recognize these situations anywhere, right? So behavioral detection, misconfigured, not running, various other types of configurations. So the controls were present, but they were not configured in a way that was going to catch these attackers. And that is very typical of things that end up in incident response. And they could truthfully answer yes to all the questions on their insurance form about these controls, and the insurance company would not have any awareness of these misconfigurations. So that's one example.
You might wonder, would this have been covered? And yes, it would, because again, things will happen even if the questionnaire was truthful, even if you have controls, and these things get missed. But again, to not cause anyone to be defensive or anything.
No.
And we recognize that this is something we need to address as an industry with the cybersecurity
Yeah.
industry as well
Like-
as the insurance industry, because they are costly to address.
Yeah, mistakes get made, right? And they're going to keep on getting made, and it's all of our jobs as defenders and vendors to try to control those. Here's an interesting one. So the employee receives a phishing email. All that phishing training worked. He read the email and he said, this looks suspicious. I better send it to IT. IT read the email and clicked the link and infected the network. And yeah, we all laugh, and it's like, think about, could that happen to me, right? So they had a legacy email gateway, right? The more modern approach is to plug into Office 365 directly, because then you can see internal emails and things like that, but they did not have those kinds of controls. And the IT employee opened the link and didn't notice the suspicious activity, and the attacker was able to move laterally in the environment because they had some misconfigurations in their EDR deployment, and they had some incomplete coverage. So they had various assets in the organization that had no security controls on them, and the attacker was able to obviously use those for various forms of privilege elevation and so on. This is a very typical story, and the EDR was not regularly monitored. So where there was EDR detection, it was not actioned in a prompt way. Some customers, some organizations have got into the habit of, because they're stressed teams, right? Oh wow, weekends, evenings, et cetera, small teams. They're not at the cadence yet of the attackers. And who wants to be monitoring EDR alerts at 3 in the morning on Saturday, right? We'll talk about where that has to go. But this is another example where, hey, they're doing all the right things superficially, and insurance would have said, sounds good, here's your policy. And that's how we got into the trouble of these policies resulting in big claims. So when we zoom out a little bit and we look at trend IR data over a longer period of time, I really get interested in these conversations. I ask them like, hey, how do these attacks start? And the first time I asked them this, I was kind of surprised to hear the answer. Oh, it's really only 2 things. I was, really? Only 2 things? Yeah, like half of it's phishing, half of it is exploitation of unknown or misconfigured internet-facing assets. And then the trouble flows from there, right? Phishing and other kinds of social engineering, right? But broadly. And then when we did a little bit more digging, right? 35% of the cases, there were alerts, but they were missed or they weren't acted on promptly. 72% of the time, security controls were there, but they were misconfigured. We had a situation, for example, where a customer had a different EPP product, not Trends, but this could happen with any product. They had misconfigured an exclusion, and .star was excluded in the EPP, and that's wrong. So the EPP was not looking at any files, for example. 39% of cases, the security controls were present, but they were out of date. Right, they were using old versions of software and so on. So these are things that are typically not visible on insurance forms. So there is a way to do this better, and we're going to pivot into that right now.
Yeah, and one of the things that just pains us as a group, I think, is when these cyber incidents, whether it's social engineering, monetization of a breach, ransomware, it's the money, the resources of your premium and the policy resources, they're going to be funneled into these threat actor groups. And so the ransom payments, Chainalysis did an analysis of the ransomware payments, and there was a dip between 2021 and 2022, which is good news. I would asterisk that, and that's the last point, that there's been a rebound at the end of last year, and the first quarter has seen an uptick in ransomware severity.
Yeah.
We can attribute the momentary decline on some geopolitical things that were happening at the beginning of 2022, but also we think that the decline in the last year between 2021 and 2022 was due to a variety of factors, and I just wanted to point those out because it does give some insight into things that are happening that could improve this situation. For instance, more companies now are being more resilient, so they have strategies in place, they have incident response plans, business continuity. A lot of these things the insurance industry is pushing. These are value-add free resources that will help an organization be more resilient in the face of a cyber event, but in particular ransomware. We particularly focus on the backup situation, so we're making sure that if they are hit with ransomware, there's a viable backup strategy there, as well as other controls that could be in place that we hope and that we see have had an impact on the amount of ransom. When there is a ransomware event, that the amount of ransom is declining, or the instances where ransom has to be paid as a last resort, as no other option available, good option, that is decreasing.
Yeah, and I've talked to several insurers and several other cybersecurity vendors, and everyone agrees, yeah, there is an uptick happening now in the ransomware success, and that's because attackers adapt, and they've also regrouped. They were disrupted in various ways, but now they're finding new things to do that will be effective. And so, yeah, we can't pat ourselves on the back yet.
Yeah, it is concerning because even with the backup strategies in place, we can have double extortion.
Exactly.
So it's the suppression of data, or
Exactly.
you'll see the threat actors say, fine, you don't need the decryptor, but I'm still going to ask you for $1 million, otherwise I will publish your secrets. There could be even triple extortion too, when they go and are actually calling family members and customers and clients of that organization, and really basically embarrassing them that they don't have good controls. And so there's a lot more ways to exert pressure on an organization to pay the ransom, even if the decryptor is not the primary need for that transaction. So it is concerning. They're getting just more tricky.
Yep.
And so the questionnaires have improved. So I just wanted to show an example of a more recent application, and you'll see that because phishing is such a key gateway to an organization's infrastructure that we have focused on, let's go a little bit more in detail. So is an organization conducting phishing training, and how often, and if there's a failure rate, are those individuals being retrained? So things like that, where we can really improve the questionnaire. That being said, it's still an imperfect process in many people's opinion, just because it's not as accurate a depiction of the real state of affairs.
Yeah, and even if they're starting to ask better questions, which they are, there's constantly new TTPs, right? The attackers are doing new things, and the questionnaire is out of date almost instantly, right? So actually, if we go back to that one for just a second. Great. So they used to say, what email security do you have? And that was about it, right? And it turns out that even asking what vendor you have isn't necessarily indicative of your risk, because you can misconfigure any vendor, right? But now they're asking a bunch of questions. That's great. But they're still not, for example, asking, well, okay, does your email security have visibility to internal emails? Because that's a new tactic. Well, that questionnaire is 6 months old, so, right, or maybe a year old. So it's really hard for these questions to keep up. And the other thing is they're really painful, right? Yeah. They're getting longer now. They ask more questions. Do you want to answer more questions? No, you do not.
The page is long, and we're not going to be sending them out every month just to get more current information.
I saw one form that was 35 pages long.
Yeah, not ours, but yeah.
Yeah, I know, right? So there is a better way, and we're going to talk a bit about some of the stuff that's going on that is helping. So, and it's really, there's kind of an echo, something we can relate to. Perhaps some of you in the room do this, although I think we're all cybersecurity people, so we might shy away from this particular thing. But some of the car insurance providers will give you a discount if you run their app or you plug in this device into your ODB port, and it will monitor your driving continuously, and then they get a better picture of correlation of driving habits to claims. So if you're driving crazy and braking heavily and speeding all the time, they can understand that, and they can rate your policy a little bit differently. So that has been going on for a little while, and there is a similar approach to that continuous assessment that's happening in two ways that are kind of converging. So Teresa and I are going to talk about that. So the first thing that's going on inside organizations themselves, and you've been hearing about this, it's a space that's been sort of emerging and getting a little bit higher profile in the last year. Some analysts call it a different thing, of course, because they all have to have their own acronyms. But attack surface management is a market category that broadly is about discovering your assets. So, finding those internet-facing assets, finding the misconfigurations, finding so on, assessing the risk across that, and then prioritizing for security teams the relevant mitigations. So it's kind of like, hey, what are the top 5 things that you or team should be focusing on today based on broad visibility? And that's something that organizations can obviously do for non-insurance reasons, because it really helps you keep attackers out in general, but also can be done before insurance applications. You can get into a cadence. And then the other thing that's going on is cyber insurance is also doing continuous assessment in a few cases. So some cyber vendors are starting to do this more continuous assessment approach where they're pulling telemetry on your security controls and then understanding those controls and doing data modeling and data science to understand the risk and have an opportunity to engage with the customer much more often. So let's start with that last one, the cyber insurance. Tell us about that.
Sure.
Yeah.
So this is exciting. And sorry, the middle diagram is a bit small, but I can talk through it, and I have it large on the next one, so don't strain your eyes. But part of the challenge, as we've talked about, is that application process is just, it's a static data point, just that one moment in time where it's signed and the risk manager or whomever, maybe not even the cybersecurity team, is providing information, but that is an imperfect way to underwrite to a risk that's dynamic, that's shifting, that has many risk signals, and requires a more in-depth risk assessment. So the automated continuous collection of telemetry in the cyber insurance space is what Cowbell and other insurtechs have been starting to do, and we've done it for a while, is to collect data points from many sources. So it's not just the one source of the risk manager providing that questionnaire. It's scanners, it's third-party databases, it's telegraphics, firmographics, anywhere we can grab data from on that organization. And this is the outside in. We also have live connectors through APIs that will provide us inside-out data from behind the firewall, which is extremely valuable, extremely insightful, and that is going into the machine too. And then these data-driven immediate types of input can really inform the underwriting decisions, the data selection, the creation and adaptation of an insurance product that works for that organization, their particular risks and exposures. Also, we can incentivize that organization by, I'll go into it a little bit later, by subjectivity. So if they're not doing so well in a particular area, we can help them identify that security gap and help them get better. And they are our customers, so the goal of being resilient to claims is the same. And so there's a good partnership there that we see an opportunity with policyholders. One of the really interesting aspects of how the cyber insurance, especially those that follow this continuous assessment model, is that we can benchmark how organizations are doing relative to their peers. This is important because if you look from the perspective of perhaps a threat actor that's focused on healthcare and that industry in particular, and they're thinking that's a rich data source, or there's a lot of money there, or whatever it is that's attractive, how would our policyholder or prospective policyholder rank relative to the peers in that industry? So it has to be a more granular analysis and focus. And so benchmarking how a particular prospective policyholder is doing relative to their peers can then in turn provide better pricing or more relative pricing to that actual risk. But also we can help them by saying, look, your peers are doing X, Y, and Z. That's why maybe they have a different premium rate than you. And we can help with that. The point here is that if you're doing very well, if you're doing better than your industry partners, industry colleagues in that benchmark, and that's that blue kind of line. And then we also break it down so that it's not just are you susceptible to a cyber incident, but how are you doing on compliance? How are you doing on supply chain? There's different factors that feed into the overall risk pricing, data science of it. So there's cloud security, endpoint security, dark intelligence. Funds transfer, different ways that we can analyze those thousands of data points into some clear benchmarking and ranking. And then the idea is that if you are better, if you're doing better, if you have better controls, if you're more resilient than your peers, then you should get better pricing than your peers. If you're not doing so well, then your insurance coverage, because you're riskier perhaps, is going to be higher. And then if you're in the middle, there's some things that you could do better on. And so this particular profile, this organization is not doing too well on the funds transfer. So they're susceptible more than their peers at 65, and the industry benchmark is 75, that we help them focus on that particular function in their organization. So maybe that is training, maybe that's the financial department that needs some best practices guidance. The subjectivities of that middle, so they could be doing better. We're not going to decline them as compared to a few years ago, but how can we help that organization do X, Y, and Z, and then get better rates, but we're still going to take them on as a policyholder, as a customer. And this is where it gets interesting, because we really do see that organizations are taking the guidance of cyber insurers, because now we have this financial incentive that they can, most often the security team can go to their C-suite or whoever holds the purse strings and say, look, our cyber insurer is recommending that we do A, B, and C, and if we do that, we're going to get better terms, we're going to get higher limits, we're going to get a reduction in our premium perhaps. So, but this is the driving of adoption of better practices of security controls that might otherwise take longer to kind of get there. So the subjectivities, and if we do recognize that the small to medium-sized enterprises have challenges in the cybersecurity departments, so maybe not as robust and underfunded and very tired cybersecurity professionals. And so a lot of cyber insurers are now also taking the approach of having in-house cybersecurity experts, risk engineers that then can get on calls with organizations, with their customers, and say, look, if you don't, we recognize you haven't patched, or we're monitoring you. We know that you've maybe missed a few updates. Let's get that taken care of. Or we see that you had a subjectivity, so that might mean your ransomware limit is $500,000 perhaps, but would you like to have it increased to the full $2 million limits with no increase in premium? By the way, the how you get there is, let's make sure you have MFA on everything. Let's make sure your RDPs are protected, and take a look if you really need them open, things like that. So the cyber insurance industry has provided these value adds to the piece of paper that historically was, you get your policy, you put it in a drawer, you cross your fingers, make sure you don't, hope you don't get a cyber incident. Now it's a more constant engagement, and that's a necessity, because the threats are constantly changing too. So something could happen this afternoon, and I would like my risk engineers to reach out to that particular policyholder population that's vulnerable, and let them know, be vigilant, take note, these are some steps that you can take to mitigate. So we've seen, some of your colleagues in this space experience this type of vulnerability being exploited. Perhaps you should do A, B, and C. So it's almost like an outside, valued partnership that really is impactful to driving better practices inside.
Yeah. And then what I've seen is a fascinating parallel development of this other technology, attack surface management, that's really aiming to solve the same continuous assessment problem, right? So I've become a really big believer in the value of continuous assessment, not only for insurance, where things are changing so often, but inside the organization. There's all kinds of reasons to do it, including people who are doing zero trust projects, for example, where you want to understand the risk of any particular asset at any particular time when they're making a connection. But more broadly, customers being able to be more proactive, security teams getting better visibility about what they need to do today compared to the list of thousands of other things they could be doing. So again, this is a market category. There's a bunch of different vendors doing it. There's a bunch of different vendors showing you sort of risk scores and visibility, trend, and a bunch of other people. So I'm generalizing here. The idea is that you're trying to, first of all, discover the assets in the organization. There was an early focus to find servers and laptops and things like that, but now it's like what applications are in the mix, what SaaS applications are there, what kinds of AWS services are in use and where is the data, what identities are in the environment, and so on. The first step is just finding what they are and where they are. The work from home employees, because we've seen some incidents, right, where threat actors were able to get into an organization by compromising somebody's home computer. But after you do that discovery, the value comes from this risk assessment. And the goal there is to weigh all kinds of factors that get collected across that inventory with respect to where they are on the network, criticality, who's using them. Is it the CEO's laptop? Is it my laptop? Is it internet facing? Is it in the DMZ? What's the story? What controls are present, how they're configured, basically everything you can collect about it. And you can also build an asset graph and you can understand what the data flows are. So which people talk to which assets in various different ways. And that leads to the ability, which is constantly refined, right? So none of these solutions are going to be perfect at telling you here's your worst risk or giving you the right number on your risk score. But things do bubble to the top of the list, and that's the idea. It's kind of like, hey, for the wide array of things in your organization, there's always going to be misconfigurations, there's always going to be vulnerabilities and so on. There is a limited team size, so what are the 5 things that you should focus on today based on as accurate an assessment as can be made by one of these tools to say, okay, well, yeah, you know that vulnerable server that's internet facing, that's a highly exploited vulnerability right now, that's probably one of your top tasks. Or hey, there's a lot of misconfigurations, but your domain controller in the bottom left of the picture there, yeah, maybe you should fix that one first, right? Trying to prioritize based on what the vendor knows about how attackers behave, how they exploit certain TTPs, and then the next level is trying to get predictive to say, well, okay, we expect that the attackers are going to do these other things next, and that can influence the weighting of these graphs. So this is helping, right? We're going to talk a little bit about how organizations accept these kinds of controls. For attack surface management, they're not that intrusive, right? So the idea of simply getting better visibility across your environment, is it helping? I think the concern early on is it just going to generate more noise, or is it actually going to help? And the experience so far in talking to our own customers, but also other vendors and analysts in this space is, yeah, you know, the prioritization is helping. It's not perfect, but it is guiding people towards getting into a more proactive posture and focusing on the most important things versus dumping lists from all kinds of different security controls and then trying to figure it out from there. Even inside those silos, right? Like the vulnerability assessment vendors have got really good at telling you, okay, here's priorities on your vulnerabilities. But some of those vendors are also doing attack surface management because they're saying, yeah, the more we know about what else is in the environment, what the other controls are, we can actually prioritize better. So very, very valuable. And it also helps prioritize detections. So if you're using EDR or XDR and the XDR product is able to understand more about the risk levels and the asset criticality and so on, it can actually prioritize detections in part based on that asset criticality. So it can say, oh yeah, well, this is an external facing asset that's involved in this particular detection, therefore bubble it up higher. So those things working together is very, very effective. How about customers, when you're talking to them about plugging in their security controls into the insurance company, how do they react to that?
Well, there was a little bit of resistance at first because it's a new approach for sure, but it's been adopted and welcomed. The main reason why I think is because it does create a more accurate picture of that organization's risk and vulnerabilities, and not just that, but because we're helping them to then address it, right? So we're providing guidance. As well, I think it's important to say that the rates have an ability to come down if you're a better risk. And so that's also incentivizing and part of that welcoming in of the insurance partner to help them to lower rates. And this also obviously has an impact, greater impact, because we're getting better data. And with that better data, we're able to then tailor the product to focus on the actual risk, to make sure that the policyholder, when they do have a cyber incident, that it's the right coverage. So, but just don't take my word anecdotally for it.
Yeah.
We do see, we've been monitoring, and part of the continuous assessment that we do during the policy period, we do see that organizations throughout just like the 1-year policy period will have a 9% improvement on their security posture just by becoming an cyber insurance policyholder. They also have a lower claims rate, so that is music to my ears than the industry average. So there's continuous assessment because we have rich claims data, so no claims goes to waste. Even with a low claims rate, there's rich data in that instance that we can then provide insights to the greater population. So if we see something going on, we'll advise, we'll send alerts out, we'll have our risk engineers reach out to policyholders so that the ones that don't have a claim can be better protected so they don't become one of the ones that do have a claim. And then also just with the value add, so we recognize that pricing has increased, of course, but the different resources that I mentioned that are part of the cyber insurance program now, the risk engineering services, the referral to vendors that we know are impactful and efficient, that we've negotiated preferable rates for the incident response, and other resources that are part of the insurance package now for cyber. We are coming to the end, and so we wanted to kind of give you some insight into what you can do now to prepare for your cyber insurance renewal or apply for cyber insurance, and just to have better posture.
Yeah, so by the way, the RSA Program Committee reviews these slides in advance, and they provide feedback and so on. And one funny comment, so across the bottom there, they wanted a timeline on our recommendations. And so next week, and then they said, it might be a little aggressive to get people to deploy EDR next week. And I said, yeah, I know. I work at an EDR vendor. We know we can't do that in a week. The point is, there are organizations out there that don't yet have EDR and don't yet have MFA. And if you haven't started rolling those out, you should start making that plan right away, because you will not get cyber insurance if you do not have EDR and MFA controls in place. Especially with the traditional insurers, they will just reject you on site. So those are very, very important steps. Of course, we know they're not magical things that will make all problems go away, but we just have to point out you will get rejected if you don't have these controls. And then, of course, it's worth starting early, as Teresa mentioned. So if you wait until you're filling out the application form to realize that they're asking about certain things, by then it's probably too late. So work with your broker, work with your insurer to understand what it is that they're going to be looking for, because that always changes. So consider attack surface management to help you get in front of that, but work with your broker. Teresa, some of the right-hand column stuff?
Yeah, sure. Yeah. And basically here, every insurer has a different approach. And so what I've said today is the approach that generally insurtechs are taking with the continuous assessment and scanning and outside in, inside out data approach. But talk to your broker about what would work, if there are other options, because really you do need the coverage at the rates that are right for your organization. And if there's an insurance company out there, a cyber insurer, that's going to help you, guide you to what that would be, whether it's this policy period or come back next year and when you're a better risk, and we'll give you terms then. But just to understand that there's different approaches out there.
Yeah, so let's do the 1-minute crystal ball before we have to let these people go.
Here's my crystal ball.
Yeah, I know, right? It's a pretty one. So quick predictions from both of us with respect to where this is headed. No surprise, ransomware and extortion is going to continue to evolve. So there's not going to be a near-term moment in time where we say, wow, okay, we beat those guys. It's continuously evolving. We all have to recognize phishing and BEC in particular, which is, again, like phishing is 50% of the initial attack vector. BEC is a huge chunk of the claims. It's getting harder and harder for humans to detect. So you really have to consider the policies, the procedures in-house for things like invoice payments. You have to think about how these attacks are going to get through. And vendors like us, we have to think about how we can do better. We can't. Nobody should be saying, "Oh, wow, the user clicked on a thing they shouldn't have clicked on." It is getting super hard for them to figure that out. And hey, yeah, data science is getting better.
Data science is getting better. We started out by saying, "Oh, well, it used to be not weird, but different that you'd have to wear a seatbelt or have a carbon monoxide thing in your house." And maybe one day these things that are kind of sounding like, oh, this is a burden to have, like really the insurance company is making me do X, Y, and Z, that won't even be such a controversial thing that we're talking about, that these controls will be more mainstream with the goal that we'll have better data, even something like a connector into your organization so that we have some of that good data so that we can see if there's something adrift that we can then help the organization come back on and be more resilient, that those things will be seen as a value add, as a different type of partnership with your cyber insurance partner. And so I think there will be more widespread adoption of this continuous monitoring assessment and approach.
Thank you so much for coming to our session. It's really fun to have you here and nodding and putting up your hands at different times. It's been a pleasure. If any of you have questions, we are happy to stick around. I think they told us we actually have the room for a bit longer, so if people want to do audience Q&A, that's fine. Otherwise, just come on up and chat with us. Thank you so much.
Thank you very much.